Hello everyone, welcome to the video. This video is not just a monthly catch up on the portfolios, it's also a year end look at where I've been for the year. It's my first year investing, so I'm super excited to get in. Let's jump in, let's take a look how the year's gone. Hi guys, so welcome to the video. Like I said in the introduction, this video is a year-end look at how I've been doing in my investments. It's the first time I've ever used stocks this year. I first got started in March, obviously when the crash happened. Because I didn't have a lot of money though, unfortunately March, April, May, even June and July, I didn't really get that much chance to get a lot of money in there. So I have pretty much missed out on a lot of the crash bargains that a lot of you guys might have picked up. I just basically wanted, when the crash happened, I wanted to put a little bit of money in, dip my toe in to the water as it were, try a few little trades, see if I can get the hang of it. I've never done it before, I've never done anything like this before, so yeah, I have missed out a lot on the crash unfortunately. I guarantee I will not miss out on the next crash when it comes, if it comes, when it comes. But yeah, so because I didn't really start investing heavily till September, we'll take a look at my actual true return on income at the end, which I am personally super chuffed at, to say that I didn't really start investing heavily until September. So yeah, let's jump into the phone. We'll take a look at both portfolios, my dividend portfolio and my growth portfolio that started last month. And we'll also, after that, take a look at my paperwork, the stocks I've purchased and sold. We'll take a look at what dividends I've got this year, what dividends I'm expecting next year, and also I'll give you that true return on investment figure at the end. So yeah, let's jump into the phone and take a look. Okay guys, so we've jumped into the phone now. Let's take a look at the portfolio for the year's end. My account balance is £3,047. My portfolio value is £3,042, so I've got a bit of leftover free funds. I've invested £2,868 and it's currently giving me a return of £174.8p, which is 6.07%. It's been an okay week. I did go up as much as nearly 8% at one point, but it has dipped down a little since. As you can see, for the month, I've been pretty good. And if we look at the full year of trading, you can see when I really started in March, it was just the odd bit of money, £55. I'm really impressed with how it's shot up over the year. I'm happy to invest at £3,000. I don't have a lot of free cash, so for me, £3,000 is really good. Obviously, next year I want to do a lot more than that. I want to try and make that up to 10,000. Let's have a look at the investments then for the year. 3M, I still own one share of 3M. It's slightly down at the minute at minus £2.18. But if we go in and take a look, I am actually up on the stock. Wow, I wish I'd have bought down there when it was super low, but I didn't. Anyway, my investment is up 3% at £4.13, but the FX impact today is really bad, so a lot of my American stocks are looking really red today. It's not a true representation of where my portfolio is at. AbbVie, I've got 2 shares. And yeah, it's looking good. I like AbbVie. It's a really good company. It's done really well for me. It's shooting quite high. I'm actually up 17% on it. But again, with that FX impact, it's really knocking it down a little bit. Apple, I've got 2 shares of. It's done all right for the month. Let's have a look for the year. You can see that gradual increase, which I'm happy about. And again, I'm up 13.7% before FX effect. So AT&T, I've got 9 shares of. I am down 7.45% in this. You can see for the month, it was doing really well. It almost shot to 32 nearly, but it has crashed down again back to that $28 mark that we all know and hate. But that's okay. AT&T is something I'm going to continue to put money into. I'm going to cost average it down when it goes down this low. I'm actually down a little bit at the minute of £5.64 or 2.77%. But like I say, that's okay. It's a good dividend paying stock, 7.23%. Whenever it dips like this, I'll just buy some more and get that cost average down. Coca-Cola, 4 shares. This is one that I've been adding to all year. As you can see, for the week, it's up 2.5%. And for the year's trading, you can see where I came in at. Obviously, I've missed all the low crashes. That's just because I didn't start investing until after the crash, unfortunately. But it has recovered nicely, and I bought in at a nice price, and it's continuing to go up. I am showing just slightly up of 2.6% because of that FX effect again, but I am up 9% on the stock itself. GlaxoSmithKline, 19 shares. I've been adding and adding and adding to this. This is one I've not been sure whether to sell or keep or increase, but I've decided to keep increasing in it. I'm down 5%. For the week, it's actually up 1.3%. And as you can see for the year, it is been on a massive downward trend for the year. If you look at the actual max, you can see that this stock does go up and down wildly all the time. All I can do on this is get in as low as I can as possible. Because it does pay a very good dividend of 6.84%. So as long as I can keep buying low, I'm happy to keep buying GlaxoSmithKline, get that cost average down. So when you do get these peaks, you know, it can really look well on my portfolio. Johnson & Johnson, I've got 2 shares of, and this week they're up 2.75%. For the year, it's been pretty stable. They obviously crashed like everything else did, and then it's recovered pretty much straight away. If you got in then, you'd have been really happy. I'm actually up 5% on the stock, or £11.59. Legal & General, 75 shares. I'm up 44% on this. For the last week, it's been pretty flat. But as you can see for the year, I got in on this really low. I think I got in around here. And it's just shot up ever since. So yeah, I'm up quite a lot on Legal & General. I do like Legal & General as well. They've got a good dividend payment of 8.86%. Like I say, I'm up 44%. I don't want to add any more into this. If it dips again, I'll add some more. But other than that, I'm just going to ride it out and see where it goes. I'm not planning on adding any more into this unless it dips. LTC, one of my favourite stocks. I'm just about breaking even with. For the week, it's actually down 1%. But we take a look at the year graph again. It has recovered nicely from the crashes. It's been a bit stagnant, and then it's gone back up again. It is a monthly paying stock. I'm up 4% on the actual stock itself. And it does pay 6.39% dividend yield again. So again, another very nice paying dividend. Microsoft, I just have the 1 share of. I'm actually unsure what to do with Apple and Microsoft in this dividend account now. It does only give you a 1% dividend yield, and I have got this in my growth portfolio, so I don't really know if I want this in my dividend portfolio anymore. It would free up $200 for me as well to spend on other stocks. But if you take a look at the year, you can see just how good this company is. It just keeps going up and up and up. I am actually up 6% on the stock itself as well. Old Republic International, like LTC, this is one of my favourite ones to do. It's up 2% for the month. If you take a look at the yearly graph, you can see just how much of a good run it has been on lately, and I've really averaged down well in this. I've got a very good price. It's actually up 20% on the stock itself, and it pays a very nice dividend of 4.4%. It pays quarterly, but for the last 4 years, 3 of those years, they've had a special dividend of $1 per share, which is going to happen again in January. So I'm going to get $14 in January, which is out of the quarterly dividends as well. So I'll get the 4 quarterly dividends as well as the $14 in January. So I get 5 payments next year. And again, that's huge. That's almost a free share there for me. Raytheon Technologies, 3 shares of. For the week, it's up 1%, and we take a look at the year. It's not really recovered that much yet, so I do think this has got some good recovery growth still to happen. It was up as much as $156 at one point. It's now down to $71. I'm currently up 20% as well at the minute on the actual stock itself. and it does pay a nice dividend still of 2.73%. It's a growing dividend, and I think if it can just if it can get back up to 100, maybe a bit more than 100, I'm going to see some really nice gains on this one, as well as that dividend yield. Realty income, 4 shares of. Again, for the week, I'm up 1.36%, but for the year, you can see it's been pretty stagnant. To be honest, it's not recovered from the crash yet either, which had highs of $82. So it has still got some recovery to go. It is slowly recovering over the year, but it's not really doing anything great. I'm actually just about break even on the stock at 0.7% up. But again, it's one of those good paying dividend yields, 4.73. It's a monthly paying dividend as well, which I really like, and I'm really happy to keep this in my portfolio. And why it's staying at this price, I'm going to keep adding to it. Royal Dutch Shell. For the week, it's down 1.8%. We take a look at the yearly graph. Wow, hasn't Royal Dutch Shell had a pretty crappy 2020 like the rest of us? It's never recovered from the highs of about £22-23. It's still down at the £12 mark. Luckily for me, I bought in very low here, and I've averaged down quite a lot as well. So I am actually up 21% in this company. It is paying a 5% dividend yield as well. Now, I know a lot of people have cashed out on this because they've been in the negative for such a long time. When it did start to have this blow up here, just when a lot of people went into the green again, they've decided to sell. Now, me personally, I really do think this can get back up to £18-19. So I'm going to hold this company. I really do think there's more growth to come in this company. And with a 5% dividend yield in the meantime, I'm not grumbling at 5% dividend yield in the meantime, when I'm already up 20%, and I can see that going up even more as well. So I'm going to add to and hold Royal Dutch Shell. Come to my 2 ETFs now at the minute. I still want more ETFs in this dividend portfolio, but I've got the FTSE 100. We can look at for the week, it's down 0.3, and for the year, you can see it's down 14%. It did have highs as much as £33. Obviously, it's crashed like everything else. I got back in late of the recovery, but it has been going up nicely ever since I got in on it. We can take a look. I'm 6.42% up, which is great, and it pays a nice dividend yield as well, which I'm happy about. And then we come to my last one. We look for the week, the all world high dividend yields. It's up slightly by 1% for the week. Look at the yearly chart, you can see the crash like everything else, and it has had a nice recovery over the year. I'm pretty happy with that as well. So I'm 7.88% up, and like FTSE 100, it has a really good dividend yield as well, which I like cashing on. So that's the dividend portfolio. I've got 16 investments covering £3,039. LTC being my biggest position, and if you scroll down you can see my other positions. Like I say, I'm not too sure about Apple and Microsoft if I want to keep in this portfolio, because I have got a growth portfolio as well. But yeah, I'm just going to keep adding up. I'm going to try and balance it out as much as I can, but I am going to get the best bargains going. So it's not necessarily just going to add from the bottom. You know, if I want to add more realty income, I will do. GlaxoSmithKline and AT&T are all at a dip as well. 3M is ready for another investment as well. So why it's down, I don't know why I don't just get that as well. So I've got plenty of buying opportunities. That's the dividend portfolio. So in terms of actual buys this month, I've not actually got that many. I bought LTC properties, 5 of, for £142. I also bought one more GlaxoSmithKline, followed by a further 7 a week later. And then I bought another Old Republic International, and that's all I've actually bought this month. If we take a look at dividends themselves then, Coca-Cola, I got £1.2p for 4 shares. Realty Income, I got 59p for 4 shares. Old Republic International, I got £1.74 for 13 shares. Royal Dutch Shell, I got £2.50 for the 20 shares. Raytheon Technology, I got 90p for the 3 shares that I own. We've got 3M, we got 94p for the 1 share that I own. Microsoft paid this month as well at 37p for the 1 share that I own. Johnson & Johnson for the 2 shares, £1.28. And LTEC is the last one, 60p for the 5 shares that I owned at the time. So that's the dividends and that's the orders for the month. Okay, so let's look at the growth portfolio now. This has just been started a few months ago. As you can see, I've got an account value of £336, so not a lot of money. I am up 13.35%, which is awesome. And as you can see, I've only just started at the end of the year. So if we scroll down, I'm not going to go into all of these. I have got a pie called the Frank Plus Plus pie. So any part investments in here are all in the pie. So the Adobe is in the pie, the Alibaba is in the pie, but I've also got 0.5% purchased on top. Alibaba, if you don't know, has had this huge decrease from £2.56, and they went right down to £2.21, if not even less. So I decided to buy some more in Alibaba. I do see Alibaba being a $300 or $400 company in a year or two's time. So while it's in the dip, I decided I'd buy half a share, and I'm up nearly 1% on that. Alphabet is down for me at the minute. Amazon, Apple are both up. Apple's up quite nicely at the minute. Facebook is slightly down. I've got MasterCard and Microsoft and Netflix. Nvidia is slightly down. We've got PayPal in the pie at 6% up, which is awesome. Square, which is 1.4% up. I've got Tesla in the pie as well. That's 10% up, which is good to see. My other big investment in here is Tattooed Chef. I'm up 40% in here. Take a quick look at Tattooed Chef. You can see I got in really low, which is awesome. And it's been on this massive run of late as well, gone right back up again. I do see this being a $40, $60, $80 company. So I'm happy to hold this for a year or two, see where it goes. But yeah, super happy with my Tattooed Chef, which is 40% up. So that is the growth portfolio. Okay, so that's the portfolios for you guys. We're just going to take a look now at how the year has gone and my thoughts on the process. This is the first year that I've been investing. And as you can see on this screen, I started out very small actually. I didn't have a lot of money at the beginning of the year. Obviously when the crash happened in March, April, I'd only put £50 in, and I bought some Marston's and Lloyd's shares with that. I got a free share of Royal Dutch Shell, that was a free share. And for April as well, I only put £25 in. I only put £25 in May, and then I put £30 in June. So really, I didn't have anything really in until July, and even then it was very small amounts of money. It wasn't really till September when I put the big chunk in that I got all the money come through. I did sell out of Marston's for nearly 100% profit, and I cashed out on Lloyd's because it wasn't going anywhere at the time. I pretty much broke even, and I cashed out on Barrett's as well, pretty much even. Barrett's was going to bring the dividend back, and then it got announced that they weren't going to bring the dividend back. And being as this was a dividend portfolio, I decided to get rid of Barrett as well. So yeah, that's my purchases for the year. Yeah, so like the first screen, there's not really much happening. The first 3 months I got no dividends at all. That's pretty much because I was selling in and out of stocks. I was just learning how to do it. Obviously, I've never done anything like this before this year. This was the first year that I've ever even looked at stocks. And then I got a few dividends come in June. Obviously, my 13p from Royal Dutch Shell. I think that was the first one I ever got from my free stock. I made 74p that month in dividends, which I was super chuffed at. You know, the first time I'd ever got a dividend. You know, pretty much money for nothing. I was loving it. But then the next month I got 28p and then 15p, and I was getting a bit disheartened. But I was putting more money in, so I knew that the rewards would slowly come. And then I broke my first pound barrier. I got £2.64, and then it went up to 3.34, then 4.61, and then I finished the year off at £9.94. Something else to note as well now, in January next month, I'm due to get a £13 special dividend from Old Republic International, as well as about £9 or £10 again in dividends. So I'm going to pretty much get £20 dividends in January, which is my entire year's worth this year. So I'm doubling my dividends in 1 month next year, and I really know that I'm going to make about 150 to 200 pound next year in dividends, which is super exciting. So this is the year. This is the year's look. As you can see, the March was the £50 I deposited. I got the free share. Then I only deposited 25 and 25 and 30. Basically, I had no money. I was only getting about, well, I think it was about 30% furlough at that point. Due to my circumstances, I didn't get full furlough. But then we went back to work and I put a bit more in. And we started getting the dividends drip through. I got another free share in November. Thank you very much, whoever that was. Also to note as well, I did build up to 1,300. That was a special month. It was a celebration, and it was to boost my account. October, £400 I put in. November I put about 400 in as well. What this doesn't show you is my growth portfolio. This is just my dividend portfolio. So I put my first 100 in my growth portfolio in November, so I put 400 again, and I've put about 400 in December as well, but again, half of that has gone into my growth portfolio, which doesn't show on here. So I've only invested 250 in the dividend side of things. So they're the totals of what I've invested, my free shares and my dividends. My account total at the minute is £3,047.54p, which is a true return on interest of 13%, which is £353. I'm super happy with that. To say that I missed out on the dips, because I didn't really start putting any decent money in until, September, and I only trickled in a bit more July and August, and by that point, the stocks have pretty much recovered for the most part. To get 13% in my first year of investing, and missing that huge crash area there as well, I'm quite happy with the 13%. I wish I'd have put 3 grand in March. That would have definitely been 100% return on investment for sure. But yeah, I mean, the graph of the dividends I'm happy with. It is on a steep incline now. I know next month is going to be about £20 up here somewhere. So it is going to be a huge steep incline, and it's looking pretty good for next year. So my account total is £3,000 in the dividend portfolio. I'm hoping to get that to about £8,000 at the end of next year, maybe 10,000 if I can push it. That would be awesome. That's my goal. That's my target, and I want to hopefully get close to £300 in dividends if I can. So there you go. What do you guys think? Like I said, because I missed the crash really, I only dipped my toe in the crash. I did lose out on a lot of those gains. But to say I didn't really start investing heavily until September, and I've still come out with that much return on investment, I'm super happy with that. Next year is going to be a super awesome year. I really do think I'm going to get more than that return on investment next year. And don't forget that's not including the growth portfolio as well, so which I'm going to add into next year. Thank you so much for watching. I have got a referral link below if you want to start trading on Trading 212 like I did in March, dipping your toe in ever so slightly. If you use that referral link, you get a free share, I get a free share. That would be awesome. If you've liked this video, give it a like. That would be awesome. That would help the channel out amazingly. And if you want to continue looking at where my investments and portfolios go in the next year, then consider subscribing as well. Until next time, I'll see you next year.